So today we will finish up the great thinkers in risk management. We've already covered Taleb, a very important writer on this topic. You covered Kahneman and Hubbard in their own words and their own videos. You can see they have some pretty important things, very important things to say about risk. Annie Duke draws a lot on Taleb and Kahneman and talks the practicality of it. We started her last session. We'll finish up today with hers. So some different ways of thinking about risk management, thinking about measurement and mitigation, and decision making, which is a big part of risk management. And then we'll look at some actual cases, see what went wrong, which one of these were following the fundamentals of risk management that's taught in finance, followed the process, followed everything you're supposed to do, and things still went wrong, and which are the cases where people didn't do what finance said and it went wrong. So as we get into these cases, it's a good way to finish up a class like this, to just ask the question, can we manage risk better, or are we just doomed to having things blow up on us because the world's so complex? So we'll use these case studies where something really went wrong and look and see if what we can learn from those cases that we can avoid the mistakes they made. So last class we were discussing Annie Duke and her ideas of the mistakes we make in making decisions, which is exactly what risk management is about. Risk management is about making decisions and then living with those decisions, whether it's positive or highly negative. Last time we covered resulting, which is assessing decisions based on outcomes, where there's a lot of luck involved there. We may be actually saying it was a good decision only because the outcome was good, which means if it was a bad decision and we were lucky, it means we're going to make a mistake the next time. Hindsight bias, which is, saying, oh, I knew it all along, I could see it coming, when in reality, at the time we made the decision, we weren't that sure, we didn't know for sure. So the next one we want to cover, let me jump down to that one, not seeing the world probabilistically. This is a really radical way of changing not just the way you think, but changing how you speak. One of my biggest recommendations when it comes to risk management is to avoid investing your ego into your forecast. None of us knows the future. And so when our boss asked him, I had a boss that would ask me all the time to predict the future. And I would have to get really good about speaking in probabilistic terms so that I would have an out. So rather than saying, hey, this is what's going to happen, the Fed's definitely going to do this, Congress is definitely going to pass this, the stock market will definitely react this way, rather than committing myself and my ego, I could do a whole lot better stating things probabilistically. I think there's a good 70% chance the Fed is going to do this, but I still think there's a 30% chance they'll do this instead. Back in the election back in 2016, I think there's a 70% chance that Clinton will win, but I do think there's a chance Trump will win. If Trump wins, I think there's an 80% chance the stock market will fall. However, I do think there's a chance the market will rally because he's talking about these things. And just thinking probabilistically, it makes us think differently. We start saying, hey, is it really a 0% chance Biden will will lose the election? A 0% chance Trump will win the election? What do we really know? And you saw on election day, people who were like 100% sure Biden was going to win. Throughout the day, people started getting uncertain and not so uncertain, more uncertain. It just shows you that people speak with a confidence that just defies our true knowledge of what's going on. We're far more ignorant than we're willing to admit. Hindsight bias is a big part of that because we tend to remember that I knew it all along. So part of this in speaking probabilistically will help you correct that hindsight bias. You document. So how do you think probabilistically? Well, stop thinking about the world as obvious black and white events. I knew that was going to happen. I knew that wouldn't happen. Stop feeding our ego that we really are much better at forecasting the future than we really are. I remember me as a UT Austin grad, UT Austin was playing Alabama in the national championship game, and people were like 100% sure Alabama was going to win. And then in the first quarter, boy, Texas was just moving the ball so easily. Colt McCoy was just passing down the field with no problems. The Texas defense was holding really well. Suddenly, that whole perception changed. It looked like, wow, UT has a good chance of winning this game. And then McCoy got hurt, and then suddenly it was like obvious Alabama was going to win. And then the new quarterback comes in and he starts a comeback. UT Austin scores a lot of points in a row, and suddenly, throughout the game, the opinion changed. But you talk to a lot of people after, years later, it's like, oh yeah, obviously everybody knew who was going to win. So our mindset in the event is always far more uncertain, and we keep changing our perceptions. So we need to focus on the process, not on the outcome. That gets back to the resulting. And how do we do that? The best way we do that is to shift to probabilistic language. When a low probability event happens, we can protect our ego. We can say, hey, I said there's a 7% chance Biden would win, a 30% chance Trump would win, and then Trump wins. You said 30%, so then you had an out, so it keeps you from having shame. But then if Biden wins, hey, I said it was 70%, so that's possible. I mean, it's the same thing in the 2016 election. There's been so many articles written about how could these polls have been so wrong, and yet the polls weren't saying Trump wasn't going to win. The polls were saying he only had about a 40% chance of winning. Now, I do think those polls were wrong. I do think there's been some evidence that people, when asked if they were voting for Trump, would say no, even though they were. And so there was and there's been some debate about how much skewing that has caused. We saw even some of that in this last election. But you give yourself an out, so if you say there's a 40% chance something's going to happen and it happens, that's not outlandish. You weren't a horrible forecaster. 40% is a pretty high probability. So it gives you an out to avoid the shame of being wrong. Protects your egos. It moves you from the you were right, you were wrong language. So we just talked about the 2016, whether it was Brexit or the U.S. presidential election, how wrong those polls were, were they really wrong, or the event happened. The less likely event happened, and that's quite frequent. So the next thing we have to do is understand the distribution. Understanding if there's some skewness going on in distribution. So if you're going for a long shot, has a less than a 50% chance of happening because the payoff, it could be potentially huge. So you may only have a 20% chance of being right, which means 80% of the time you're going to lose money. But if you lose 3%, betting on something that has only a 20% chance of happening. So 80% of the time you're going to lose 3%, but 20% of the time you're going to make 700%. That's the option payoff. Options, I love options. They give you that skewed payoff. It's a wonderful strategy, but you're wrong most of the time. And if you ignore that skewing, your decisions look bad when really, hey, it's like eventually I'm going to be right. And this is very much Nassim Taleb is this type of investing, kind of what he calls black swan investing, where you're wrong a lot of times. It's similar to my philosophy of investing. Be mediocre in most markets so that you can set up a huge win in the bad markets. And so, yeah, it's like, okay, if this market's up 10%, I'll be up 8.5%. But if the market's down 30%, I'll be up 10%. Maybe that only happens 1 out of 7 or 8 years. But if I can be somewhat close 9 years and then really outperform one of those 10 years, that may be worth it. But I've got to handle the ego of being wrong 9 years out of 10. So playing the highest probability can be an error if there's a 5% chance you're going to lose it all. And I think that's what firms like AIG and Lehman Brothers were doing in 2008. They were playing a high probability game, but when they lost, it was going to destroy everything. That's bad investing. And it gets back to our egos. Either we are protecting our egos, or we need to protect our egos. Sometimes we do things in order to prop up our egos, and that makes us make bad decisions. Sometimes when we make a mistake, we're so hard on ourselves it actually causes too much stress in our lives. So it's hard to look for decision errors for a good outcome. That's where our ego says, I was right. That's that hindsight bias. I knew it all along. It's much better to step back and say, okay, we made the decision and it all turned out well, but were we lucky or was it a good decision? What part of decision making came out well? So one thing to ask is, why did we think this was going to happen? And then go back and see if that reason actually occurred. If we thought we should do B because we expect A, and then A doesn't happen, but B still happens, then that was a bad decision. So if you say, hey, I'm going to invest in stocks in 2016 because I think Hillary Clinton's going to win, and if Clinton wins, the stock market's going to rally. And then the stock market rallies, and you say, look at the great decision I made. I said, get in the stocks because stocks are going to rally. And someone says, oh, wait a minute, your argument for why stocks were going to rally was because Clinton was going to win, and yet Trump won and stocks rallied. That doesn't sound like a good decision. That sounds like luck. So reassess those decisions. And what do you have to do? And this is something I've seen hedge fund managers do. Soros supposedly does this, which is a decision diary where you document what decisions you made and why you made them. And I would say add to that your probabilities as well, of what you're expecting. So if you think about the 2016 election, there's essentially 4 outcomes, obviously more than that, but Clinton wins, stock market rallies. Clinton wins, stock market sells off. Trump wins, stock market rallies. Trump wins, stock market sells off. Or the other alternative is the stock market ignores it. I guess that's the 5th one. I think most people were expecting Clinton wins and there's a slight rally in the stock market because that's what everybody was expecting. Most people thought, and I was in that camp, that if Trump wins, this is going to be a sell-off for stocks. And that's what happened initially. When it looked like Trump was going to win, stock markets did sell off that night. But boy, the rally came strong. Many people were talking about deregulation, which certainly came forward, and lower corporate tax rates, which he finally got that through. It looked like that wasn't going to happen, but it finally did come through. And those are 2 things the stock market really, really wanted. If you think about it after the fact, it makes perfect sense why stocks rallied. From those 2 things, those were 2 things the stock market was really concerned about. And so, but you see, I'm not saying whether it was good or bad, one or the other. I hate politics, and there's no candidate I really like. So I'm completely I have absolutely no ducks in this game. But just looking back at people making decisions back then and what people were saying, go back and assess the decision. Did it come out because of the reason you said it was going to come out that way, or was it really luck? So we assume skill drives good outcomes and bad luck drives bad outcomes. Being wrong hurts twice as much as being right. That's part of what goes on with our egos. So what she's recommending here, which I think is a really good advice, is let's reduce the positive vibes of good outcomes in order that we can improve the pain, reduce the pain of bad outcomes. So essentially she's saying, let's look at those good outcomes and just really assess them. Let's see if it was really skill. Maybe there was some luck there, and if we had decided there was definitely some luck there, then our ego doesn't get stoked quite as much. But on the same way, it's a bad result. We look back at the decision and say, "Oh, that was a bad outcome due to bad luck. These things happened. We could have never seen those coming." So you try to balance it out a little bit more. So you're willing to give some of the praise of the upside by reducing some of the anguish of the bad outcome. Another thing she says that we make a mistake on is ignoring opportunity costs. So we choose A works out well, and we say, wow, great decision. but we don't go back and see, well, I could have chosen B. How did B come out? I see this a lot with retail investors. They talk about the great stock they bought and how well it did, and the stock was up 20% and sold it, got a gain, how wonderful everything was. What they don't talk about is if they had held on to the stock, it went up another 30%. They could have made 50, they only made 20. But what people post on Facebook is whatever makes their ego look the best. But if we stop and think, well, how else could it have come out? I was talking about buying Apple or buying Alphabet. I bought Apple instead of Alphabet. Apple's up 20%, but Alphabet's up 35%. Was it really all that good a decision? I tell everybody, hey, I bought Apple, it's up 20%. But we don't talk about the actual decision we're making. Was not do I buy Apple or not. The decision was, do I buy Apple or buy Alphabet? That has an opportunity cost of how did the other do. And we tend to forget what the other option was because the option we chose worked out well. Sometimes we'll never know. We have a choice between hiring two people, and we hire one of the people and it works out well. We don't know how the other person would have done. So she talks about opportunity costs create bets against our future selves because we're making a decision. Once we decide to do A, we cannot do B. So all decisions contain risk, even with good outcomes, because there could have been a better outcome. Then she talks about motivated reasoning. This is one of the mistakes we make in decisions. The quality of our decisions really depends on what do we know at the time we made the decision. So when we go back and assess the decision we made, one of the things we need to assess is, could we have gotten better information? And this is a big thing Doug Hubbard is talking about, is we need to be more quantitative, and then we need to put a value on information. Why is our distribution so wide, so flat? Why is the distribution so wide? There's just a huge uncertainty. Where could we spend our money to bring that distribution in? We often believe stuff without any basis in fact. This is part of the confirmation bias that you heard Kahneman talking about. We hear something, especially if it's consistent with what we've already heard. So this is real important. We've got to somehow become skeptical people. I was giving this presentation to an actuarial conference, and I wanted to give them some examples of how we believe stuff so quickly. I'm going to give her a solution to this, which I haven't tried yet on Facebook. But before I did the presentation, for about 2 weeks, I said I'm just going to capture all the ridiculous fake news gets posted on Facebook. Just for 2 weeks, I wanted to capture it, and there were, oh my word, I thought I'd get 5 or 6. I ended up with I don't know, like 20 or so. I can't remember. It was a double-digit number, and a lot of them. I just kept writing them down. I had one, I guess, friend from high school. I don't think I've ever met her before, but she posted a picture of Whoopi Goldberg wearing a really offensive T-shirt, and she was talking about what a horrible person this person is and all that. And I looked at that. We're going to talk. We won't talk too much about Bayesian logic. I'm a big believer in Bayesian logic, which means you start with just what your intuition says the probabilities are, and you go from that. You set up what makes logical sense. So my Bayesian logic when I saw that picture was, okay, Whoopi Goldberg, smart lady, very successful actress, has done well with her career. She's not stupid, obviously. She's managed her career really well. And for her to wear that T-shirt in public would have been so stupid. For someone who obviously her public image is absolutely central to her success. She's been very successful. It did not make sense to me. That just completely contradicted. It did not make. I can't tell you what the T-shirt is because I can't remember it. But I just remember that my first impression is, I think this is photoshopped. The Bayesian logic, my most basic understanding of what makes most logical sense here is, she did not wear that T-shirt because it doesn't make sense for someone in her position to do that. So I Googled and found a site actually with Whoopi Goldberg's own site where she was critiquing that particular picture, and she showed the actual photo of what shirt she was wearing next to what what people were claiming she was wearing, and the t-shirt she was actually wearing was not offensive at all. Now, how do I know which is true? I believe the second one, mainly because it made more sense to me, but that may be that confirmation bias. And I don't care about actors and actresses. I don't, I'm sure I strongly disagree with all of them on a lot of stuff. But just looking at that picture, it's like, how could they believe this was correct? It did not make sense. Just the basis, there's photoshopping going on out there. Why don't you go back and just research it? A lady from my church put a post up about boycotting Pepsi, because Pepsi put the Pledge of Allegiance on their Coke can, on their Pepsi can, but left "Under God" off the Pledge of Allegiance. And I looked at that again. My Bayesian logic. I'm imagining in my mind Pepsi getting together all their high-ranking officers and saying, "Hey, let's put the Pledge of Allegiance on our Coke, on our can, and let's leave 'Under God' off. Won't that be great? People will love us for that." I mean, does that make any logical sense at all? That's completely ridiculous. So I Googled that one and discovered, and this one I'm quite confident of because I found a few sources. It wasn't Pepsi at all. It was Dr. Pepper. It was right after 9/11, and they did not put the entire Pledge of Allegiance on their can. They wanted to have a can that represented what was going on after 9/11, so they just picked a few words from the Pledge of Allegiance. One nation united. They just put those words in there. I thought that was pretty cool. One nation united. And they did get some flack because "under God" is between those two terms. And so people did complain, and when people complained, they took the can down and stopped using it. They didn't use it very long. I didn't find that all that offensive at all, and it made sense. They pulled a few key words from the Pledge of Allegiance because unity was what they're focused on. It was a bad decision. They pulled it and took it out. They should have thought that some people would react to that. And I never confronted. And I'll talk when she talks about one of her solutions to this type of fake news that we see all the time. One of her solutions, and I'll be curious what your feedback is on actually trying what she was saying. So we are much less open-minded than we think. We tend to believe things way too quickly. There's a book I read recently. I don't know if I recommend it, but I did find it very, very intriguing. It's called "On Being Certain." And his whole argument in the book is not what we're certain about. It's not about fundamentalism or people just being closed-minded, but it's really about why are we like that? Why do we become so certain about stuff where it makes no sense for us to be that certain? What's the actual mechanism of the human brain that tends to lead us? And it's a very interesting one. He gives some stories that I might tell here, So motivated reasoning, we have type 1 errors. That's when we believe something when it's not true. And then there's type 2 errors. That's when we don't believe something and it is true. And so this is part of why we say humans are like this. Type 1 errors are not nearly as bad as type 2 errors. When we believe something when it's not true, that doesn't hurt us nearly as bad as when we don't believe something that is true. If we think there's a line in the grass and there's not, big deal. We just, we might have messed up our day a little bit. Maybe we went home early out of fear, didn't enjoy the rest of the afternoon, but not a big deal. But if we don't believe the lines in the grass and it is, then we're going to die. So type 1 errors are far less costly, and so we tend to, as humans, make more type 1 errors than type 2 errors, and we tend to do them fairly quickly. We also have the confirmation bias, which we tend to believe things that confirm what we already believe. We see that a lot. I think that's the Whoopi Goldberg. I had a student who's, to the right of the political spectrum. Hollywood people are these, far left radicals. She saw a picture that confirmed what she already believed, and so she posted on Facebook with no research whatsoever. I almost commented, one of my friends that I ran track with in high school, he commented on a ridiculous that she would post that it was obviously photoshopped and it was fake. And I thought the response to his post, I liked his post. I didn't want to get in the fray on this. I was close. I was tempted, and I'll talk about that a little later. I liked his post, but her reaction to that was, she may not have worn that shirt, but it's the kind of thing she would do. And I was thinking, well, what evidence do you have of that? That doesn't make any sense either. And why would you badmouth someone falsely? Wait until she does actually do something and then put that on Facebook. Why do you have to put fake stuff? If she really does that kind of stuff, is that the type of person she is, then just wait. She'll eventually expose herself, and you can call her out. But I thought that was interesting. Yeah, it's fake, but it's consistent with what's true. So, that's just a ridiculous way of thinking. So we rarely challenge the validity of confirming evidence. We often discredit information contradicting our beliefs. I actually think right here is maybe the key to your success in finance. Now, if you're actuarial science, they don't have as much of this problem because it's a very data-driven field. But when you start believing something strongly, you should go out and actively seek the opposite of what you believe. You should actually sit down and say, here's what I strongly believe. Let me now go find who most strongly disagrees with me, and let me read what they say. So the goal of fake news is not to change minds, but rather it's this confirmation bias. It's the more solidified. If you look at Facebook, that's one of the reasons, I wasn't tempted to respond to this. I was tempted not to respond to this lady. So her goal in posting that story wasn't to inform us, to be more knowledgeable about a particular actor in Hollywood. It was rather to solidify her group of people and their biases, their views. It was really, it was, let's circle the troops here. Let's get all together on this. Disinformation is even more powerful when it's mixed with good stuff. So you should watch this. If you want to watch some people who are really good at misinformation on social media, they'll post something. Now, boy, I've seen some of this. They'll post something that's 80% true and then throw in the 20%, which is the most outrageous stuff. But because the other 80% is true, it sounds convincing. My mom sent out a YouTube video on the Affordable Care Act. We talk about the Affordable Care Act in my life insurance class. I'm not a big fan of it because I have a very different view of what should be done, and we talk about it in the class. We have a pretty good debate in that class. But I don't hate it as much as some people do. And so my mom sent out this video that was very anti-Affordable Care Act. So I said, okay, that's unusual for my mom to be political, but she sent it out. She sent it out to me and all her brothers and relatives. And so I clicked on it, and boy, it became pretty obvious pretty quickly that this was it was significantly fake news. And the reason I knew that is, they made it look really authentic. They made it look very professional. It was very documentary type of, high quality videos. And they were quoting sections from the law. And so they made it look really authentic. And so I paused the video and I went to the actual Affordable Care Act and looked up the sections they were quoting, and I couldn't find that in that section. So then I took the words they were quoting and actually did a search on that. So maybe the law changed, maybe they changed that section. I could not find that wording anywhere, or where I could find that wording, I discovered they took it way out of context. Oh, it's horrible. I emailed my mom and everyone else on that email and saying, if you want to talk Affordable Care Act, I'll be more than happy to talk to you about it. And I think there's positive and negatives to it, but don't watch this video. But that video was set up in a way that some of the stuff was true, and they put that early on to try to bring people in, and then they started just throwing out stuff that was absolutely not true. And of course, people, that were on, Republicans on the right side, they want the badmouth Affordable Care Act. Their response was, hey, this confirms what I already believe. I posted something about that, I saw someone post something like that on Facebook, and I did challenge her and say, that's just not, I said, you don't have to worry, that's not true, that's not what's happening. Her brother responded, and he said, it may not be true, but sometimes hyperbole is important in order to make a point. And hyperbole is a fancy way of saying lying. in an extreme way. But that's the world we live in. In finance, you can't do that. You're making decisions with other people's money. You can't allow this type of motivated reasoning to influence your decisions. It's not so bad in politics and other places where no one really cares what we think. But when we're managing other people's money, we better double check what we believe. And when we have to admit we're wrong on something we've been committed to for years, that's extremely painful for our egos. So we fight hard not to do that. I've changed my opinion on reading. What to define as a good book. To me, a good book versus a great book. To me, a good book is one that's well written. I'm learning stuff. It's interesting. A great book is one that changes an opinion, and especially a great book is one that changes my opinion on something I've believed for years. So I actually go into it. Is this a great book? Will this book actually change what I think in a radical way? If it does, that's a great book. So start seeing that destroying something you believe for years is actually a good thing. That's what you actually want. You're seeking that out. Now you might say, well, this fake news, this is a problem with uneducated people. People have dropped out of high school. Smart, highly trained, MBAs, whatever. They're not going to make this mistake. However, that's not true. There were some tests done, and they did this test on non-controversial issues like skin creams, which is the best, and on controversial issues like gun control. And they discovered that smarter people did better on non-controversial issues, but actually did worse on controversial issues. What that means is when you have a lot of education, you have a lot of background on something, your confirmation bias is even stronger. You have even more ego invested in your decisions. So this is not, I'm not talking to people that just, don't have any quantitative background, don't know the issues. This is even more difficult for people who've been well trained. You're doing your project on the efficient frontier, and there's people who've been using it for years. They've been moving money around, moving billions of dollars around based on that. It's going to be really tough to admit efficient frontier doesn't work. It's not a good way to do asset allocation. So they're going to have a tough time rejecting it. Whereas someone who doesn't know it that well, and you present the weaknesses of it, they'll probably say, yeah, that doesn't make much sense. They'll probably come around much faster to good data than someone who's got a lot of vested interest. We are wired to protect our beliefs, and intelligence and awareness of our biases does not rescue us. Obviously, Kahneman talks a lot about that. We have these biases, and even being aware of them, we can't do anything about it. So, you can do something about it. I take that back. But we're still subject to them. So, what can we do to try to overcome these horrible decision quality destroyers? So here's her strategies. I use some of these all the time. In fact, some of these I've been using most of my life and not realizing it was a strategy. It was just the way I like to think. But the first one is want to bet. So this is her recommendation. I was tempted. Now remember the Whoopi Goldberg example. I was tempted. That was my first time to try the want to bet argument. Whereas what you do is you say, okay, I'll bet you $100 that this is photoshopped. And when you put money up, it changes the way people think. And if you do that, you actually put money on the line, essentially getting people to put skin in the game, you'll get people thinking differently and get them less subject to these wild ideas that they're seeing without any analysis. So, hey, you think she wore this shirt? I'll give you $100 if it's true. You give me $100 if it's not true. Now, someone says, well, that's illegal in Texas. You can't gamble. I wonder if I'd said, I'll donate $100 to your favorite charity if she wore that shirt. You donate $100 to my favorite charity if she didn't. I think I could have been okay with that. I still haven't tried it. I've been tempted so many times on Facebook to do that. But if you get skin in the game, we tend to vet our decisions much, much better. Anonymous betting markets do better than actual experts. And some firms have actually thought about this, putting anonymous betting markets into their process for forecasting, and you will actually do better when you put these markets where people can actually win money. Now you might say, well, that's really illegal. These binomial option models markets are out there. They're very interesting. I always watch them. I find them really, really fascinating. I've never bet any money on them, but they're very, very interesting. But research shows, if a firm, let's say Valero needs to forecast oil prices, their best forecast would probably be go out and have any employee that wanted to give a forecast, and the most accurate forecast win $10. And the worst forecasts lose $10. I don't know if, boy, that would be a tough one, but if you could set it up and it's not breaking Texas law, you would end up with a better forecast. We already talked about this, thinking probabilistically, so assign probabilities up front. We need to place probabilities on our beliefs. The more we do this, the better we are at assigning those probabilities. Doug Hubbard, this is one of his main things that he talks about. How can we get better at calibrating our beliefs? And he says the best way we can get better is to start doing it. At first we'll be terrible, but over time we'll get better and better and better. I might talk about this in one of our Thursday night sessions, just how he assesses it. I think I showed it in one of the videos earlier. So we're acknowledging uncertainty. So it helps bring down our egos. And also, since we're thinking, hey, I think this has a 70% chance of happening, but there is a 30% chance it's going to happen, now we're looking for articles and data that might help confirm that 30% or even increase it some. So it makes us more open-minded. We're willing to read stuff that's in that 30% camp instead of, because we didn't tell our boss, oh, I'm sure this is going to happen. We told our boss there's a 70% chance this is going to happen. Now we have more of an incentive to look at those lower probability events. Use the language of uncertainty. I've started doing this. I have so many friends on Facebook who are omniscient. They're all knowing the things they say. There's one thing I posted about the $1,200 stimulus check last year. I thought it was ridiculous that I was getting $1,200 because I'm independently wealthy. I'm actually in the 1% wealth. And, I should not be getting $1,200 from taxpayers. I certainly don't need it because most of my wealth is in tax-deferred vehicles. It doesn't show up in my taxable income, but I thought $1,200, they could have found a much better way to use that $1,200. And so a lot of people shared that post. And so I actually looked at a couple that shared. I was just curious if there was going to be some negative reactions. And one guy, boy, he was negative reaction. And his argument for one of my points was the word false in quotes. That was his entire argument. He didn't say why he thought it was false. He just said false in quotes. I try really hard in my blogs. When I don't post much on Facebook that's controversial, but if I do, I try really hard to start sentences with, in my opinion, I believe, and I strongly recommend that you start using that language, or even better, I believe this to be true, but I'm only 70% certain right now. To actually even put numbers down. So in my opinion, I think there's only I think there's a 70% chance Biden wins the election, a 30% chance Trump wins the election, whatever, put those numbers down. And then if Trump wins, you had a 30%, you have an out there. So that's even better than just saying in my opinion. In my opinion, then put a number down. And what this also does, think about it. You're at some party and someone says, hey, what do you think about the election? And someone says, oh, Trump's got this thing won. There's no way he's losing. Well, you're now shut down. You've got someone that if you say, no, I think Biden's going to win, now you have a big debate. If instead the person says, you know what, I think Trump has a 55% chance of winning. I think he has a greater than 50% chance of winning. That now opens the door for you to come back and says, no, I really think Biden's got 55% chance here. It's not this my ego versus your ego. It's now just your distribution versus the other person's distribution. So by speaking in probabilistic terms, you allow other people to challenge you much more easily. So as part of using the language of uncertainty is, she says, lead with agreement. Now, I have to say, I don't use this very much. I tend to put people on the defensive, so I need to work on this more. I like to challenge people, and so I don't do it in a good way. So I should try this more. But she says, try to make your differences in opinions sound like you're adding more information rather than negating what they said. So someone tells you, says, hey, I think Trump's got a 55% chance of winning. You say, well, I agree with you that he has a good chance of winning. And I think there's certainly some data there. And if you look at some of the data, it's certainly, I don't know how you turn that around to get but if you try to start with, I'm not dismissing what you're saying, but I'm adding to it. If you can, it may not work in the election sense, but try that. I agree with you on these things, and I would add that maybe we should consider this, whatever. Maybe one, I'm not very good at this because it's hard for me to word it exactly the way she's thinking here, but trying to start with agreement. Figure out what you do see what they're saying that's part of your scenario, and then see where the differences are, and then somehow bring in those differences with, and have you thought about this? Or I've also seen data that says this, so I agree with you that that could definitely be the outcome, and I've also seen data that says this. Have you considered this? That kind of thing. Bring it in too, so you can continue the conversation without negating each other. And sometimes you're going to have to just validate the past. So you can change the focus onto the future. So someone has had something horrible happened. You want to get to a better decision the next time, but you can't just say, yeah, that's horrible that it happened. Now what you did wrong was this. You got to somewhat show some compassion. I'm sorry that happened. What is your strategy going to be next time? So maybe it won't be so bad next time. But make sure you ask permission. There are people who are not asking for advice. They just want to vent. So if that's the case, let them vent. Just ask, hey, are you telling me this because you just want a sounding board and you just want to vent? Because if that's the case, boy, I hear you. I've been through that as well. I'm really sorry that happened. Or do we want to talk about what we could do next time to maybe make this better? I'm not good at that. I'm really bad at that approach. I'm not good with interacting with other human beings because it's tough. You never know where people are coming from, so be sympathetic and empathetic. Use experience as a data point. This is really, really, really good. So we tend to overemphasize one sample size, but experience is a sample, and several experiences can become a decent sample size. So we learn from experience by using outcomes of data to learn. And if you think this way, okay, I made this decision, it came out well, so that's one sample size. So I don't know if it was skill or luck, but it's one sample size. Okay, I made this decision again. The second time it didn't come out well. So it could have been a good decision followed by a good decision with bad luck. It could have been a bad decision with luck followed by a bad decision turning out exactly how it should have been. So that's what we need to do, is use experience as a sample size. One of the samples to try to figure out, was this luck or skill? And over time, we can start figuring that out. So your goal is improvement. So after good decisions, you want improvement on the next decision, and you want compassion after bad decisions. And we can greatly increase our sample size by observing other people's lives in a probabilistic way. We tend to observe other people's lives in an egotistical way. When other people have something good happen to them, we say, oh, that was luck. When other people have bad things happen to them, we say that was bad decision, that they deserved that. We should seek truth over everything else. That should be your goal. So if you want to feed your ego, feed your ego by telling yourself how much you're learning. That you learn something that others are missing because of their biases. So why is this important? Because a slight improvement in decision quality compounds over time, and 10, 20 years later you will be in a radically different place because you've made these better decisions. She recommends a decision pool or decision pod. I certainly used this at USAA. It was very, very helpful. You want a group of people that are going to be your honest feedback people. The group doesn't have to follow social norms. You're actually creating a group to make things uncomfortable, and you tell the group that we're going to say things that are in other contexts would be stepping on toes, offensive, but here we're going to do it. And I always think, when do people get offended? A lot of times people get offended because they're hearing a truth they're not yet emotionally ready for. I'm not saying that's all the time, but a lot of times people hear stuff and it's like their ego's not ready to hear that truth, and they get offended. And in my opinion, when the truth offends, we should reform. And so you need a group that says, okay, this group offends. We're going to step on toes. Just be ready for it. I had that group at USAA. It was called the USAA Asset Group. And boy, you would have thought we hated each other's guts the way we talked. Boy, we were constantly making snide remarks. We had the overly aggressive people in the group, overly conservative, and we kind of always knew this guy is always going to be bullish, this guy is always going to be bearish. Dee Dee was pretty bearish a lot of the time, but not all the time. She had a better math background than I did, so I really liked hearing her opinion on things, but she tended to be a little bit on the bearish side. Arnie tended to be bullish about everything, but he had some good insights, especially on certain asset classes I didn't know much about, so I would listen to him. I tend to be more on the bearish side because I'm always thinking about risks, so maybe I was more biased toward listening to Dee Dee than to Arnie. But listening to both sides, but getting it brutally honest, and me being brutally honest back with them. And we need this because people will often spot our blind spots better. We can find our own. So what does a decision pod do if you were going to try to create a group like this? And she's saying be formal about it. Find a group of people as diverse as you can get to get together, and your goal is to create a decision pod, to assess every decision you make in your life. You want to pursue exploratory thought. You don't want this group to be a confirming group. You don't want everybody to say, hey, yeah, man, that was a good decision, that was bad luck. You want an honest feedback. You want people open-minded. The goal of the group is truth over everything else. All are accountable to the group in terms of accuracy. The group should reward accuracy, and you want a very diverse group there. She pulled some of this from Robert Merton. You may have heard of Merton, the guy, the Nobel Prize winner, I think. But this is his father. He has something called kudos. The first one, communism, we don't really like that term. He doesn't mean communism as an economic form, but communism from the standpoint of group dynamics, that the group is committed to the group. There's no secrecy. There's no individuals. When you're in this group, it's all honesty, all out. Universalism. Everything's accepted no matter the source. Don't shoot the messages just because you don't like the message. There should be disinterestedness. Avoid biases that can influence your decision. So if you're trying to have the group give you feedback on a decision, don't tell the group the outcome, because then they're going to have resulting bias. So you say, okay, I made this decision. I decided to take this job, or I decided to buy this stock. This is my rationale behind it. What do y'all think of that decision? You get all your feedback, and you say, oh, well, the stock was up 20%. So, your feedback, it sounds like you're thinking my decision was all pure luck, that I had a good result. Whatever. But don't let the resulting bias influence that. It should be organized skepticism. You want engagement. You want dissent. Knowing that you're going to explain the decision you made to your decision pod will probably improve your decisions. You know you're accountable, so your decision pod will start influencing your future decision, which is what you're after, right? You want a better decision going forward. That's why, I told you I wasn't a big fan of Sharpe ratios and trainer ratios and information ratios. Why? Because there's no data that I have found in my studies that show they're actually predictive. So what your goal is to make better decisions, and so that should be the goal of this group. Time travel, I love time travel. I do this a lot in my decisions. We make better decisions today by actually putting ourselves into the future and assessing the decision, thinking back to today. Let your future self influence your decisions of your current self. This is called mental discounting. We need to remember the future. So we discount the future way too much. Our discount rates on the future, this is one reason people say we can't solve global warming, because global warming is going to hit well after I'm dead and be a major issue at that point. And people say, hey, why do I care about something that's going to happen 50 years out? So if your discount rate's too high, then a multi-trillion-dollar event 50 years out, discounted today is not very much. So we tend to discount the future way too much. So what we need to do is move the regret of a bad decision, move that future regret, move it to today. Because today we can impact the decision, in the future we can't. I do this with dieting. I used to have a horrible time about going to H-E-B and buying the crate of Oreo cookies, and my decision was thinking about how wonderful those cookies were going to be. But what I do now is I now go to the future and I picture myself, and I honestly brutally think about eating those cookies, and the thing that hits my mind is, it's really only about the first 3 or 4 cookies that are all that great. They are sugary and they taste great, but that's like the first 4 minutes. Then the 5th through 10th cookies, they're okay, but it's kind of lost, and I'm starting to get a little full. And then cookies 10 through 25 are pretty disgusting. And then I go to bed and I have acid reflux, and it's just a miserable night. I have this sugar high. I feel miserable. My stomach feels terrible. And I'm going to drive all the way to H-E-B, buy these cookies, bring them home for about 4 minutes of great ecstasy of this sugar, and then another 30 minutes of this pain of eating these things, because I got to eat them now because I went all this trouble to buy them, and a night of misery, acid reflux. And so once I started thinking about that, I started thinking that, yeah, I don't want that regret, so I would move the regret to today. Jerry Seinfeld talks about this in his stand-up comedy. He talks about the night guy and the morning guy. The night guy makes all the decisions to do stupid things, get drunk, stay up too late, because he doesn't bear the regret of that. It's the morning guy that bears all of that. And the morning guy wakes up and says, I hate night guy. I have to pay for all of his sins. And so what she says, and I like the way she says, is we need to be compassionate to our future selves. We all think about showing compassion to our fellow human beings. We do nice things for other people. We sacrifice greatly to help other people out. She says, show compassion to your future self. Make sacrifices today in order to show compassion to your future self. I love it. I think it's a great way of thinking. So, people think about this for retirement. We know the American public is not prepared for retirement. Why? Because that regret of not being able to enjoy retirement is not a regret they're thinking about. That's pushed back. They're more thinking about the joy of buying the jet skis today. Time travel can be enhanced for pre-commitments. So you have a ride-sharing contract if you're going to go out, someone's going to go out drinking. Avoid overeating by reducing your idle time there. I know for me the worst thing possible is a flight delay. If I'm stuck in the airport for 4 or 5 hours, I'm going to eat horribly. I don't know how to prevent that. Bringing healthy snacks, that would be good, but you can't. It's hard to bring healthy snacks. So I haven't quite figured that one out. I may never be able to get that, but that's I should think about it. What can I do in advance? Automatic investment is one. Set up your credit cards to full pay. How does thinking in bets differ from how we normally make decisions? So how do we bring all this together? We think of our future as several possibilities. So we're thinking probabilistically as a distribution. Think of your future as a distribution. We use probabilities to determine expected values, to equate high payoff, low probabilities with low payoff, high probability outcomes. So we're acknowledging the skewness of the data. We value optionality in decisions. That's one thing I think people really don't make good decisions on, is the fact that decision A has 3 decision trees in the future. So we choose A, We get a year out, we have three different routes we can go. We choose B, B's it. We don't have any if once it goes bad, we're stuck with it. So A gives us some outs, some ways we can protect ourselves. A has a lower expected return, but A has three outs, where B has a higher return, but if it's wrong, boy, we're stuck with it. And then imagine a destination and walking back from it. That's called backcasting, a really powerful thing to do. That's part of the time value. So what do? We imagine the future and we assume, hey, everything worked out well. And we ask, what did we do that led to that good result? That one works okay. A better one is the bad outcome. We say, okay, I decided to do this. Here we are a year later, and it didn't work out. So this is called negative visualization. It works a lot better than positive visualization. So we say, okay, my goal is to lose 20 pounds this year. I go a year into the future in my mind, I imagine, and instead of losing 20 pounds, I gain 10 pounds. Why did that happen? Well, there's this person at work that brings all these muffins to work, and I just can't resist them. How can I fix that? Or I was doing well until Thanksgiving and Christmas, and then over Thanksgiving and Christmas, I gained everything about. And what you do is you establish plans so you can overcome those. Maybe one of your problems is you throw a birthday party for your nephew, and you think all these people are going to show up, so you buy all this food, and it's a bad weather day, and only half the people show up, and you end up all this food at the end. How can you handle that? Well, maybe you buy less food. I tend to overbuy for parties. Buy less food. Maybe you assign someone that says, okay, I think 40 people are coming. I'm going to buy enough food for 30 people. But as they come, I need you designated to run to H-E-B and buy more food if 40 actually show up. So you designate someone to go buy more. And what big deal? That takes 20 minutes, 30 minutes. And, you can discover that you're running out, and they can go do, those kind of pre-planning. But you think about it, you put yourself in the future, you think about what went wrong, and then you plan in advance for those kind of things. And then the last thing, thinking in bets, what it does, we see good outcomes just as one possible path, not as the inevitable, I got it all right, I'm so smart, hindsight bias. So life is a long game. We will still have failures, even if you follow her advice here. So the goal is not perfection, the goal is to improve, the goal is learning. If you always set that, that's what your ego is after. You reward your ego when you learn, not when things work out well, because that can be luck or skill. We've got to be brutally honest, we've got to be engaged, and we want unbiased advisors. So going back to the class notes on page 50, we just finished up Annie Duke. If you didn't like the PowerPoint approach, you can read my blog. Essentially, I wrote the blog first and then do the PowerPoint. Or go out there and read Annie Duke. It's not a long book. If you bought it on Audible, there's other things she said. I'd be really impressed if you added other things I left out. I think I covered 80-90% of her thoughts. But I do think Annie Duke has what I like is her practical side. She gives solutions that I think work. They work for me. Some of these I've been using for years, and they work very, very well. So this brings down the question. We talked about fake news. To whom do you listen? And here's my approach. I want two criteria, really three, but two criteria. First, I want people that have technical knowledge. I do not want to listen to people who have a strong opinion but have no technical training. So they're skilled, they're knowledgeable. I can look at their resume and say, okay, they have some evidence they know what they're talking about. And my second criteria that's just as important is, what is their incentive? Their incentive should be to be correct. That is, they have a lot to lose if they're wrong. So they change their opinion quickly when new information comes along, because if they don't, they lose a lot. They have very little ego invested in their positions. And then the third one for me is even better if they disagree with me. If I can find someone who's technically very knowledgeable and they've got to be right. I mean they need to have truth on their side. So if they're wrong, if they have a particular forecast, a particular position, and they get information that shows that that's wrong, they'll change it quickly because their incentive is they've got to get this right. They've got too much vested in this being right. So I'm going to give an example. Global warming is a big debate. COVID-19. To whom do you listen to? We got politicians, Trump, AOC on global warming. Neither one of them are technically proficient. They don't have degrees in environmental science. They do not have an incentive to be correct. They have an incentive to make their argument. They've invested in them being correct. You're not going to hear Trump say, you know, I was wrong about global warming. It's really, really serious. We need to change the position. You're not going to hear AOC say, you know, I was wrong about global warming. It's really not that serious. You know, I no longer think we should do anything about it. They have too much vested in the positions they've already taken because they're politicians. What about advocates? You got Greta, you got Gore. Boy, I forgot to put Limbaugh out there. You know, rest in peace, Limbaugh. But you have people who are advocates. Advocates are not good places to go because they're good as long as their position gets pushed, whether they're right or wrong. And they're taking strong positions on something we're probably not going to know the truth for 40, 50 years. So, you know, they're pushing a particular side, and they've got a lot of ego invested. You know, the CDC and WHO on COVID-19, we've had a lot of debates about what are the incentives on either side. Why does this become so political? I like groups like Swiss Re and the cat modeling companies. When you're talking about global warming, Swiss Re insures insurance companies for major catastrophic losses. That is their whole business. If global warming is increasing the frequency and severity of hurricanes, they better be right about their position because that's how they're pricing their product. Catastrophe modeling, that's their whole business. They better be right about the impact of global warming on their business because if they're not, they're going to go out of business and their competitors are going to take over. So they're these are actuaries, engineers, weather people. They're highly technically knowledgeable. They have master's degrees, PhD degrees. Their whole business is set up on them getting it right, getting the right information. Those are the kind of people I listen to. All right, so we'll talk about some of these a little bit more in our 7 o'clock Thursday session. What we're going to do going from here in the videos is we're going to be doing case studies. So we'll get into the case studies. We only have 2 classes left to do case studies, but I think we can get through them really, really well. We can do Orange County and MG together, and then long-term capital as one class, so we can cover them and give ample of time to each one.